Today I'm sharing something special with you. A stock I just bought this morning that almost nobody is talking about, while everyone's chasing the same handful of AI names. I found a company so perfectly positioned for the infrastructure boom that it's basically a toll road on America's entire digital future. And here's the kicker. It's trading at less than 8 times earnings. While its competitors are valued at 15 to 18 times, this isn't just another AI play. This is the company that makes sure the $1 trillion being poured into data centers actually works. When a hyperscaler builds a 100-megawatt AI facility that costs tens of millions per day if it goes down, there's one type of company they absolutely cannot live without. Today, I'm pulling back the curtain on Acuren Corporation, ticker TIC, and why I believe this under-the-radar stock could triple in the next 18 to 24 months. The problem: infrastructure under unprecedented stress. Let me paint you a picture of what's really happening in America's infrastructure right now. The American Society of Civil Engineers just released a bombshell report. The United States needs $9.1 trillion in maintenance spending, just to keep our infrastructure from falling apart. We only have $5.4 trillion funded. That's a $3.7 trillion gap, but here's where it gets interesting for investors like us. The AI boom isn't just creating new infrastructure. It's putting unprecedented stress on everything we already have. Data centers that consume more power than small cities. Aging power plants being forced to stay online longer instead of retiring. Electrical grids pushed to their absolute limits. When a coal plant was scheduled for retirement, but now needs to run at full capacity to power AI facilities, what happens? Someone needs to make sure that 30-year-old infrastructure can safely handle the load. When a new data center in Virginia needs 100 megawatts of power, equivalent to a small city, every electrical component, every transformer, every high-voltage cable needs to be tested and inspected. That's where Acuren comes in. They're the second largest provider of non-destructive testing in North America, and they've quietly built an annuity stream on America's most critical infrastructure solution. A toll road on critical infrastructure. So what exactly does Acuren do? They perform non-destructive testing and inspection, essentially making sure critical infrastructure works without taking it offline. Think of them as the doctors for power plants, pipelines, data centers, and electrical grids. Here's why this is such a beautiful business model. Over 90% of their revenue is recurring. The service is mission critical, but represents less than 2% of their customers' operating expenses. And once you're the trusted inspector for a power plant or data center, switching providers is the last thing anyone wants to risk. When that hyperscaler builds a new AI data center, every major electrical component must be tested before it goes live. Acuren performs radiographic testing on welds, ultrasonic testing on transformer tanks, thermal imaging of electrical connections. The hyperscaler happily pays because a single failed component could delay the facility opening by months, costing tens of millions. But here's the real genius. Once operational, these inspections become mandatory. Insurance companies require it, electrical codes require it, uptime guarantees require it. Acuren returns quarterly or annually with their mobile labs, generating recurring revenue that often exceeds the initial construction work. This business model scales beautifully as infrastructure gets pushed harder. A coal plant scheduled for retirement now needs intensive testing to safely extend its life. Instead of a one-time decommissioning contract, Acuren gets years of additional recurring work at premium rates. The secret weapon. The NV5 acquisition. Now here's where the story gets really exciting. In August, Acuren completed a transformational acquisition of NV5 Global for $1.7 billion. This wasn't just any acquisition. This was a heist. NV5 is playing a critical role in the global data center buildout. Through their mechanical, electrical, and plumbing consulting expertise, they're designing and commissioning the most advanced AI facilities in the world. They're working with every major hyperscaler to implement high-efficiency liquid cooling and power distribution systems. Get this. NV5 recently surpassed 1 gigawatt of global data center design and commissioning. In 2024 alone, their AI data center work helped clients unlock 300 megawatts of additional computing capacity. That's equivalent to powering 100,000 homes. But here's the kicker. NV5's data center unit generated less than $50 million in revenue in 2024. But management believes it could produce more than $400 million annually in the next several years. That's a 10 times revenue multiplier on just one division. And that's not even the best part. NV5 also brings geospatial mapping and digital twin technology. They recreating ultra-detailed 3D maps and virtual replicas of physical assets that transform maintenance from reactive to predictive. Think of it as Google Maps on steroids for industrial robots and AI systems. The valuation opportunity. Why nobody sees this coming. So here's the million-dollar question. If this business is so compelling, why is it trading at such a discount? 3 reasons. First, it's a SPAC overhang. Acuren went public through a SPAC, and despite being backed by legendary business builder Sir Martin Franklin, the market still treats a SPAC stocks with suspicion. Franklin, by the way, has a track record that speaks for itself. His previous similar company, API Group, has generated over 30% annualized returns for investors over the last 5 years. Second, there's a misperception about cyclicality. People think because Acuren works with energy companies, they're exposed to commodity cycles. But virtually all their energy exposure is downstream. Pipelines, refiners, power producers that operate regardless of oil and gas prices. Plus, they provide non-discretionary, safety-critical services. Third, the NV5 acquisition added complexity. Doubling the size of the business while issuing equity and increasing leverage made some investors nervous. But here's what they're missing. Acuren acquired NV5 for less than 10 times EBITDA, while comparable companies are trading at 15 to 30 times. The math? Why Acuren could triple. Let me show you the math that got me so excited I had to buy this stock today. If NV5 hits their standalone revenue target for 2028 and legacy, Acuren grows at just 8% annually, giving neither segment credit for cross-selling synergies, and the combined company hits a 20% EBITDA margin. They'll generate over $600 million in EBITDA by 2028. That would represent nearly 30% annualized EBITDA growth and put them more than 20% ahead of current Wall Street expectations. Right now, the entire combined company is valued at just over $3 billion, less than 8 times EBITDA. Meanwhile, their peers are trading at mid to high teens multiples. Even if Acuren just re-rates to peer valuations on current expectations, there's 100 to 200% upside. But if market tailwinds and revenue synergies drive growth acceleration while margins exceed management targets, which I believe is highly likely, this stock could appreciate by multiples of current levels. Look, I don't make stock purchases lightly, especially not ones I announce to all of you. But when I see a company positioned at the intersection of AI infrastructure, grid reliability, and digital transformation, trading at a massive discount to its intrinsic value, I have to act. Acuren Corporation represents something rare in today's market, a way to play the AI boom that's not priced for perfection. It's a toll road on the infrastructure that makes everything else possible, with recurring revenue, expanding margins, and multiple paths to significant value creation. The infrastructure boom is just getting started. The question isn't whether we need more data centers, better electrical grids, and smarter maintenance. It's who's going to profit from making it all work. I believe Acuren is positioned to be one of the biggest winners, and that's why I bought shares this morning. What do you think? Are you as excited about this infrastructure play as I am? Let me know in the comments below, and don't forget to subscribe for more deep dives into the stocks I'm actually buying with my own money. Thanks for watching, and for more stock picks and access to my portfolio, check me out on Substack.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.